Hi, hello. Welcome to another market update. This is Victor and ES Futures trading here. We have an inside day with value lower. In a day, this is hard to grasp for many people. We have a downside trend in the daily time frame. The weekly has not established a downside yet. Alright, we need at least three bars, but the rally has ended. The month is approaching support. This kind of highs or kind of lows are not usually these are not that good. The main thing and inside there the market is on a 10-day balance. If we count today, it's 11 days. The day previous volume usually is thinner. And day previous to some important releases. News release as non-farm payrolls, which is tomorrow. We have. Oh, by the way, I just came to the market. I wasn't doing anything. I just came to trading desk. Didn't do anything. I'm in no hurry to do anything. Let the market settle. And just look at this. What is going on, right? Some days down, up, down. This 5 minutes just has ended the downside trend. And a lot of things can happen in days like this. Think markets can can have wild ranges. But notice where we are now. It almost took the high, came back to halfback. There was a lot of activity around this area. It's very much at the center. The markets are the center. The closer the market opens to the previous day range, the center previous day range, the higher the odds of chop we are going to have, chop and rotation. Look at craziness in these 5 minutes. It seems it's going to be now. They were buying from halfback. Look at what's happening now. They are selling from halfback now. A lot of chop here. I guess I'm going to go out again. I will stay a little bit. I don't think I'm going to stand to stay from. Oh, by the way, there is this guy, this Tom Haggard. He is a momentum trader. He has a book. Right? He has a book that's called The Best Loser Wins. It's a really nice book. I like that book because I don't care about. I'm not worried about my wins, but about my losses. Right? Well, dealing with wins is hard enough, but dealing with losses is the hardest thing there is. because we have to accept losses. We have to accept losses as a part of the business. He trades he trades 5 minutes charts and big lots. He doesn't trade futures straight. He trades CFDs. I guess he's based in England. And I think the most important thing here is you have to create your own strategy. You have to discover what kind of trader you are. You're not going to do that unless you go all in by yourself. I'm not saying all money, right? But you have to start to believe in yourself. Um, and you need to know what to watch. Right? Um, him, for example, what I like from him, he posts his. I haven't seen a full stream of him, but he's not the type of trader I am. He's completely different. I don't do the the things he does. I see the market in a different way because usually he trades, for example, the first hour. I don't, right? Usually, in my case, most of the time, at least I let the market settle for 2 3 periods, which is the time he does his thing, right? But everyone is different. Everyone is different, and but at the same time we are very similar too, because I saw him, for example, a couple of days ago. I believe he had a loss because he trades big sides. He doesn't need the market to move long distances to have wins. The same goes for the losses, right? Having big size, you can accumulate losses also really quick. And regarding the losses, right? If you follow him, I believe there's a lot of traders that follow him and do or mirror, right, or shadow him, right, what he does, right. Um, the day, the day you win, oh, you are happy. But the day you lose, you have a loss. You really are going to be in a really bad position. A couple of days ago, as I say, I guess he posted a 15,000 loss, right? Which for him is pretty manageable. But somebody else is taking a loss. Obviously, is not going to take a loss like him, right? Maybe less because account size. It's going to be devastating, right? Because you don't know what you're doing. You're just following somebody. You're following somebody else, and don't know the reasons why you take a trade, or why you keep a position, or why you close or take profits. You just don't know anything. That's uh, what I don't like when you blindly follow somebody. You have to understand. That's what I don't like in this channel. I don't like to post, for example. I don't like to post. I have entered here or exit there. What I try to do is I try to spread some market understanding, some basic market understanding, so you can take the decision if okay, this is the market that has gotten too long, for example, or this trend is getting old, or there is a market. I can see a market that has confidence in the movement. All these things, right? That we observe, we learn to observe, and that's part of market understanding. Then also at the same time we are learning about markets, we have to learn about ourselves. Trading will teach you a lot about yourself because we are full. We are filled. It's very rare the case that somebody has no traumas, but we are full of traumas, man. We are, you have traumas, big, small, every kind of traumas that comes from our childhood, right? And we have to deal with those ones. Right now, for example, relative to the market, we just talk about where the market open, where value is, the auto shop. And while I was watching, or while I was speaking, I was also watching this market here. And it just goes, some back and forth, back and forth. What this is taking, When yesterday, yesterday was a really nice day, right? Really nice day here, right? Traders may come with the same mentality to the market today, and now are shorting back and forth, getting short, getting locked back and forth, right? And every time the market is just running their stops. You can see that happening right now. If you don't see that, then that's something that you have to learn, right? And how you learn? There's no other way. I cannot teach you this. Nobody can teach you, right? You learn this just by experience. You got to be in the market. You got to be present to see, to internalize this kind of things. Another thing from today, for example, I have noticed there's this volume accumulation below this area, right? This rally took this area out for a little bit. This is high volume, and now we are below. Right? This accumulation. This can be tapering here. The market can be getting some. It's drying here. Look at the blocks that we're having here. A lot of blocks here. Some rates coming, and there's some pressure to the downside. Volumes low, 2,000. It's not the same having 800, 1,000 here, or rates, with 7, 8, or 9, or 10 here. Right? That's part of it. Another thing is, you don't need these comparators, these things, right? It's really nice to have it, right? But when you start to watch the market and start to draw, if you don't have market profile software, just will learn, by repetition. Look at this. If we just talk about this how this bar here, for example, this is 5 minutes, right? This is bar take this high out, which ends the downside trend, and immediately what happens? Look at this big one here. We have big to the upside, big to the downside. I mean, this is craziness here. Can't do anything here. This fakes a downside. It doesn't establish it. Then take this high. Now the next bar takes the low. So what? What is the direction here, for example, for the day? Yesterday we had direction when the second period was printed. We have direction, right? The day before also we have direction. When I was doing my homework yesterday, I noticed this day as a 2-day balance, right? Maybe accumulation of value with value inside value and POC about the same as yesterday. So kind of like it's an unchanged day relative to the previous day. So this is when this kind of days happens, what I do is I add this to the top. It could be something like this. We will have a day like this, for example, with the excess in the low side, really nice POC and value here. But what is the shape of this? This looks like long liquidation, right? just like that. A 2D range inside a wider range. Now, this level here, I'm going to change the color. I am just noticing, I'm just checking this right now as we speak. It has stopped right at the low. Right at what was the low of this 9-day range here. 3, 6, 1, 2, 3, 4, 5, 6, 7, 8. This 8-day range here. 9, including, because yesterday also, I don't know. Let me, how do I do this? How do I remove the merging? No, no. Alright. No, it's not like this. I don't know what I have done. Session at daily update layer split into days. Okay. Right? Again, this level here, the 34, the 30, is being used as a support. Now, this is the 1, 2, as I said, 9 days, right? 3, 6, 9 day range. Yesterday, we have a breakout of that range, and market has come back inside. And now, again, this is being used as a support. What I'm going to do now, I am going to use this area here. Come on. Keep an eye on this area. This one here. Okay. This one here. Because this is the distribution to this day. This is an upper, this one. This is FOMC. FOMC actually closed this distribution, but was a very volatile day, like that. I think that this coincides with the 5700 as well. All right. Can you see this low here? Very mechanical low, right? It's an indication of who is behind here. Short-term trading. Short-term trading doesn't mean small traders necessarily. I am a short-term trader, but there are also short-term traders that can have big positions. You know, these ones, for example, 100 lots. You know. Big trading floors. And something yesterday, I was paying attention to this area here that I left here. And why I have this area is this distribution, the market form a distribution. I thought at the moment, right? This was another opportunity to get a long here that I didn't take. And I was thinking, right, this was my thinking. If the market started having value here, which it did, right? But doesn't close the distribution, then there can be something serious to the upside. But this distribution was closed. Then I realized that's a 57.50. I watched. I'm glad I missed Jim's in webinar. But this webinar is really, really, really interesting here. Really good. It's spot on. sometimes, anyone, you will have days that are, you can read the markets, you can have a perfect reading, right? The thing is not about having a perfect reading, right? It's about the odds that you have something like that. And you need to understand, we need to understand that everything we do here in
I
this
don't know.
business
I
is
can't
based
verify.
on odds. It's odd based. This week ahead and this one. Um, this is also something I was watching. And the thing, this is the thing, right? I listen to Jim a lot, but I started. There was a time when I decided, I need to walk away, and do my own. And with time, we start to see, or I started to see the same things that you know, he does, and he has this market update, and I watch his market. The week ahead episode that he posts every Sunday after I have done my homework. I write, observe the market, uh, have an opinion. I may have an opinion, record my opinion, and then just after that I watch him. Right? When I used to watch before, I had it. I have what happens is I have biases. I have strong biases, and he talks about the 5750, but that's inside information that I don't have, right? He was part of the Chicago Mercantile Exchange, the options board. He was on the founders, one of the people that created the option market. So he has a lot of people still that is still in the business that has connections, right? I think that even I think he's friends with Arthur Cushing as well. That makes him really valuable guy, right? With nice expertise and some information as well. This after I walk out of the market is when I watch his webinar from yesterday. I was closely observing this area, the 5750, and yesterday was close, right? Which and why the 5715? Watch his webinar, and he has, as I say, he has information there, and but when the market closed this one, kind of like remove or take some of the potential rally that we may have away. When the market closes this, if today we have this opening, we have the opening, whatever, well, no, above this distribution, while the distribution is still open, that would have been a different thing, right? I may have been here early, but that wasn't the case, right? As a matter of fact, I went to bed kind of late again, so I'm doing some stuff. I left when the market was breaking here, when the overnight was was doing this break here. It came kind of like a down here. I thought this was good. Also, this was the low for the overnight, but it actually had more extension, right? Just to recover afterwards. And look at this J period here in the overnight. This is jobs, jobs, weekly jobs, selling. Where was selling? Selling, right? Right from that point. Where do we have more selling? Last. The very mechanical selling that is going on here. Same can be said from the buying that's happening here. Right? Both sides are quite questionable. Now, we may have some weakness here that has been This is very questionable. Okay, the upper side is very questionable. We were talking yesterday that the lower side was when the market was close to this low. The odds that this was going to be at the low of the day were very low. Very good. Also, the market was going to take. No, it was up here actually, even before. I have same opinion now from the upper side. I'm not saying that this is not the high of the day. This can very well be the high of the day, and this also can be the low of the day. But these highs are getting weaker and weaker and weaker. There's tremendous exposure here to the short side that can be taken quite easy. Tomorrow we have an important number. And notice how many highs do we have now around this area. 1, 2, 3, 4, 5, 6, 7, 8 highs. Right? So above this we have a bunch stuff. Okay. Now the next thing is, but this looks right. This looks like short covering yesterday. Now we have a long liquidation followed by short covering. This strengthens the market, weakens the market. Now, this is just part of the uncertainty that we are having now in front of this number. Next week, it seems this we may have some volatile days, because next week we have GDP, we have FOMC, we have CPI, we have GDP. Kind of like interesting times now. Notice that the market has quieted a little bit. It's not as crazy as it was at the opening, but I don't see anything, man. As I say, this can go anywhere, all right? We have these intraday highs that are very questionable, and we have these daily lows that are very questionable. 1, 2, 3, exactly, pretty much exactly at the same level. We have some volatility now, for example, how fast this market is moving. Now this is very hard. This is a very hard day. Well, very hard market to trade. It has no direction right now. We may have, I don't know what's going to happen. Volume, look at the volume we have. And there is no 2 days that are the same. I was talking to a friend yesterday. In the day previous to a market a day previous to a big number, usually there's no volume, which is the case. Let me take this one out. Which is the case today, right? Really low volume. For example, check this out. How much lower we have here? This is about like 20% lower. Maybe around 20%, 2, 4, yeah, maybe even more, 23, 25% lower than yesterday. So that fits the description of a typical day previous to some important news release. Now, in days like this, the other thing is these days have the tendency to have wide ranges, right? When the market has really low volume. Is that going to happen? I don't see that happening now. The odds that happening are decreasing as the market develops. We now have 3 periods wide here. Right? Value is lower, but still inside this 2-day value area, right? Still inside. And you can see how crazy it is, right? It's moving really fast in one direction, really fast in the other direction. Same goes for Nasdaq. Nasdaq has actually had a breakout, an upside breakout, and the market came back inside. Perhaps their range. which targets the opposite side that day. So what do I do? Notice how this market is getting short. This is I'm going to give you the 5 minutes chart again. Notice how it's getting short, right? There's a big selling here, the big ranges, big range. Now look at this. 1, 2, 3, 4. 4 times selling from this same area, right? Which is this area basically. Oh, which is the 50. Huh? Look at that. Look at that, right? You can see the 50 kind of like clearer here than in here. So what do I do? Let's go short. Let's go long. No man, I don't. Yesterday I have 2 trades, I believe. 2 trades I have yesterday. I'm not going to do anything now. This is not a market for me. And this is what this kind of days is kills, kills traders, right? Because you may have had a good day this day, another one here maybe. If you survive this day and keep your profits from this day, oh, you're happy. Now you have, now you are the best trader in the world, right? You start bumping your chest. I start bumping my chest, and I feel pretty confident, right? I figured out the market. I got it. And along come days like the one we're having now, and we are just constantly being stopped out of our position. Even the long side, and it can be the long side, it can be the short side. What the heck is going on, right? I know what happened. I know what to do. I have to be short. I have to be long, right? And the market just doesn't care, right? You are learning, and you have to understand these kind of things. And there's no shame to not to do anything. Really, no shame not to do anything. Most of the time, I don't do anything. I miss many things as well, right? But what had happened before, what took me to that position is, I was very active and getting long, getting short. At the end of the day, I have a small profit or a big loss, right? And this is hard to understand that a trader's job is to watch the market, to monitor the market, and wait, and wait, and wait. That will most of the times do it. At least that's my case now, right now. So I don't do anything, man, and that can be very frustrating. Or it was very frustrating at the beginning because you are in the market to trade, right? I have to place a trade. I must have a win because I have bills to pay. I have a loss from the other day. I have this capital that I have lost that capital was allocated to pay the rent, to pay the car, to do whatever, right? And I have lost that, and I have to make it up. If I have lost $1,000, you have lost $500, you have lost $10,000, or $15,000, or put a number there. If I have lost it, I can make it back again. That's a very, very reasonable way to think, right? Very intuitive way to think. I just need to be in the opposite direction. That's the first thing we think. And that's the beginning of the downfall. You just dig up deeper and deeper and deeper hole. Got to have patience here. That low now is very questionable. No? But just remember what we talked earlier about this low, and that this period D is doing it even weaker, right? I was watching something from this lady, this David Paplado's wife. What is? This guy I think these people hate this. Lots of people hate him. Maybe if you don't count the splits Tesla has had, I don't know what Tesla is valued without splits. Oh, he's talking about that. I don't know. It must be. Maybe it's not. Oh, but that's not what I was going to. How do you see your posts here? My activity. Okay. I love this thing. A mistake that makes you humble is better than an achievement that makes you arrogant. This happens all the time. Okay. Where are you? Oh, okay, right here. And check this. This is Linda Rusk. It has been. If you have watched this video, what's Floret? I mean, this documentary, Floret. I guess she's portrayed there as well for a few moments. What he says, what he talks about, maybe we can hear why we watch this market. Now, this low is not good, right? And days value is lower, so it's a day to sell rallies, right? Let's see if I can do something here.
Strategies really should be predetermined, and they are, first off, during the trading day, the number one rule you have to keep in mind is the less amount of decisions that you can make during the trading day. In other words, the more things that you have thought out before that day opens, the better off you are. You don't want to be having to make multiple decisions during the trading day. So very first off the bat, you must have your unit size predetermined. Are you trading 5 lots? Are you trading 10 lots? Are you trading 2 contracts? So forth. I firmly believe in deciding on your unit size and keeping an even bet size, because I don't know in advance which the good trades are and which the bad trades are, and invariably if I start doing a 2 lot where it's scariest, that'll be the winner, and if I do a 10 lot where it looks like it's a slam dunk, that's going to be the loser. So you must keep an even bet size in order to start achieving some type of consistency of numbers. The second thing, how do you exit? Exit strategies really should be predetermined, and they are set according to the initial trade setup. For example, in most of our quantitative testing, about 75% of the trade setups test out best exiting for a small piece only. By that, I mean, for example, saying, okay, I'm going to take profits at one ATR, one average true range function, or a test of the high, or a fixed target. only about 30% at best, more like 25% of the initial trade setups justify a trailing stop management and exit technique. Now, it doesn't mean that once you're in a trade, you can't tighten up the stop to cinch profits, and that's something we'll spend some time at the end of this presentation, because it is very important if the market makes a move, you pull your stop up to tighten in the profits or lock in the profits you made. That is different, though, from a trailing stop methodology to let it take you out of the trade. Examples of where we would use a trailing stop mentality could be, for example, with a trend following system. The goal there is to try and capture a trend if there is one. There was a preconditioning structure that led to the trend, and our goal is to stay with the trade and not take profits too soon. The majority of time what you'll find is that the shorter the time frame that you are trading on, the less justification there is for trailing a stop. The reason being, the shorter the time frame you go down to, the more you are trading in market noise. To give the extreme example of that, if you were a floor trader in the pits and your average trades are going on for 3 minutes, and of course we know what happened to the pits, they're not the same anymore. But if you were so, your job is you're buying on bid, trying to sell on offer. You're not trailing a stop on the trade that you just bought. That would be an extreme example. So floor traders, or even the automatic market maker systems that you see with the black box algorithmic trading that is so dominant nowadays, which accounts for up to 40% of the volume out there, if you're not aware of that, buys on bid, sells on offer. So if you are a short-term trader, especially a day trader, you need to be buying on bid or selling on offer at least 50% of the time. If not, what will happen is the friction, or what they call the VIG, the difference between the bid and the ask, as well as your commission costs, will overcome the potential profitability. Again, with that said, there are specific patterns, such as a breakout from a long extended coil, that would justify trailing a stop. But you need to have done your homework ahead of time to know which trade management strategy is appropriate at that time, and then not to second guess yourself and say, oh dang, I should have trailed a stop on that one, and so forth. Now we're going to start talking about market environments. The less volume there is and the more noise there is, the more critical it is to work a bid or work an offer for your initial entry. If you missed the trade, so what? Let it go. You're in a noisy environment, and the odds that you're leaving a big win on the table are remote. However, there are other types of market environments which I call urgent market environments. And in an urgent market environment, that is one of the times that you can use a market order to enter. And the initial goal in an urgent market environment is just to get the trade on. Okay? If you try and get cute and price it, the odds that you'll be left in the dust increase greatly. A trend follower, their main job is to get the trade on. They're going to pay up. It doesn't matter. It causes a lot of slippage, and you'll see these big, huge bars on breakouts where there's very liquidity, because this group of market participants recognizes the importance of getting that trade on. It's like first come, first serve. Whatever offer's out there, if you can grab it first, more power to you. Because their time horizons are very long. Their average holding time for a trade, might be 10 days, could be up to 2 months. It's a much longer time horizon. The longer time horizon that you're playing for, the less important that initial slippage and friction cost to your transaction is. So same thing when we are in a chart formation where we've had an extended coil in the S&Ps, and all of a sudden there's a breakout and an increase in volume. You are in an urgent market environment. And the very worst thing you would want to do would be on the wrong side of that market and say, oh, I'll wait for a retracement to get out. Okay? This would be a case where instead it would justify using a market order. So again, we have these things predefined ahead of time, what formations would justify using a resting buy or sell stop, what type of scalping environment would justify working bids or working offers. Some people like to use market orders to get in or put a buy stop to pull them into the market. And if you're doing that on a short-term basis, it is essential that you learn to work an offer and sell as the market is going up. Very important once you start working more size. If I'm doing a large order for my fund, I want to be selling into a market that is going up because now I have a market. I have buyers there willing to take it off my hands. I'm happy to let them have it and try and play for that last, little 10% of the move. Because you see how quickly, once the market turns, it's like everybody wants out the door at once. And not only that, with the advent of the electronic execution, our reaction speeds just aren't, I don't know about you guys, but they aren't like what it was when I was like 20 years old, and it's very easy to freeze, get blindsided. Wait a minute, I had a 3-point profit, now it's back to break even. What happened?
All right. I hope you have stayed and you have listened. It's only 7 minutes of your time. In the meantime, the market has done nothing. All right. Now, something that that you learn is, as she says, right? Once the market's moving in one direction, one market has moving, you got that as a way to exit, right? That's a professional trader talking there. But what a retail does, for example, right? What a trader that has just entered the market, that's learning to trade, that has been a trader that is for a long time here, but doing the same things over and over, right? Once we have these spikes, these quick upside movements, okay, this market is going higher, I'm going to buy here. Pros use, I'm not talking about this today, right? I'm not, but when the market is having momentum in one direction for something, or when the market has these spikes, and I don't know when that video was, it seems like a little bit older, but because there is some, markets are always changing. To what market is today is not the same as the last year. It's not same as 3 months ago, much less last year, a couple of years, or 5 years ago. There's different. Markets are always changing, and sometimes we get used to one market and it just sticks. That market sticks in our brain because we don't like that, right? We like to be comfortable. We don't like change, and we don't accept. Sometimes it takes longer. I have realized that to adapt to this market has taken me longer than I expected, for example. And these guys, professional pros, use spikes to get out. I may not have, and she doesn't trade small lots, right? I may trade one, maybe even micros. I trade options, and if I talk about big contracts, like she may try 4, 5, 10, 20. But that is really small, right, compared with another ones. So we all have a place in this market, right? We all have a place. We all have a way to watch. And there is a particular difference between pros and what others call retail, right? It's not that pros trade retails. Social media portrays professionals like taking advantage of the retail. We don't know, man. we don't know who is who in this market. I cannot see who is doing what thing, and everybody takes losses. She has losses. She has an advantage, right? The the advantage is she was portrayed. I think that gave her good exposure, right? And they can she's taking advantage of that, right? She's still in the business for over uh, more than 30 years, I believe, right? 30, 40 years in the business. I still here. I guess she with along Dave Pavlatos are founders of Photon Trader too. I have Photon Trader. I have Photon Trader. And what I like from Photon Trader, I actually don't use the platform. This is Photon Trader. Mm. The charts are kind of like no, I don't know how to name these charts here. This is how the charts looks, right? And if you this is for pros, right? It's very hard to do to have things here, but for example, particular swim is way better. If you want to put lines, numbers on studies on all that crap, right? This one, no. This is what you have, right? Very basic chart, but this is all you need. And I as I say, I don't use that. I don't even use their charting. I mean their trading platform. But what I like from them is they have a plugin that allows me to use Window Trader here. I don't know if other other brokers, other charting platforms can do that. Also, they give me this another platform to trade. They can give me for Rhythmic, not Rhythmic Pro, but Rhythmic. And over here, I can also use options here. I have micros, standard size, futures, and options. That's what I like. I really love this. I really like this platform because of those things. And there's a difference between pro actually and retail. The way, and that's the mindset. Right now, for example, we have this small trade. This is the 5 minutes. I mean, this is tremendous back and forth, back and forth. There's a lot of chop here, right? Look at this highs here. Like 1, 2, 3, 4, 5. We may have some big bar printing here, just aiming to take these stops out. But notice what the market is doing. The market is going higher, but the trend, the bigger one, is going lower. Can you see that? Now where it has stopped? Well, again, hard back is right there. It's the 57.50. Here's the problem. I don't know when this is going to happen, or if it's going to happen. But there's some really good fight that is being is happening around that level. And this is very questionable, man. That D high is super high. I'm not going short over there. Right? But the action, the current action, is to the downside. Most retail use 5 minutes. Oh, okay, we are going higher. We are going to take this high. This is a divergence here, you know. While one is doing something, another one is doing another thing. Right? Now, this low here is no good. Coming exactly from hardback is just to take that low. It doesn't mean that it's not cannot be taken, but to take the low coming from that is this not something I am particularly comfortable doing. And when markets just don't have, they are not there, the markets are not facilitating trade, you know, and you will see, all right, if you stay long enough, you will see when markets facilitate trade. You will see, shorts walking, longs walking. That's a really nice day, right? It's really smooth days. Market goes higher, then goes lower, or goes lower, then goes higher. You can work. You can work a trade. I don't believe that's the case for today. At least so far. We have an inside day. Notice, for example, this inside bar. After this inside bar, we have an outside bar. That tells you everything you need to know. Just get out, stay. I mean, stay in the silence, watch. This can be a good day to learn, to watch, to learn, to internalize, try to understand, try to make something of this day, educational, educational wise. Look at the volume, my friends. How much volume we have? This is really low volume here. I like this. I like this. It's unbelievable how old these sayings can be, right? And it's stand the test of time. There's many ways to see. You know, um, there is only one way to avoid criticism: do nothing, say nothing, and be nothing. Right? I guess when I was in high school, I got this writer, Spanish writer, Miguel de Cervantes, you know, that has the Quixote, the Quixote La Mancha. Once he say, I mean, at one point, I haven't read the book. I haven't. I have read a short version of the book because the Spanish, the language that in which was written is different, very hard to read for. It was very hard to read for me. Uh, there's a saying, something he says, right, to his helper Sancho. You know, dogs. You know, when they use he wrote a horse, Dulcinea and Sancho, just taking care of him, right? At one moment in time, he says, dogs are barking, right? Dogs are barking, Sancho. That's a sign we are getting going. We are moving. Right? We are getting ahead. We are advancing. But it is another way to say this, right? Mm. One of the things that has, and I look at where this high was, very questionable. Huh? This has been taken now. And why haven't you taken that trade? It's not my market, man. It just isn't. Oh, I was saying one of the things that have uh, taken me a long time to manage. It's not fully under control. It's my anxiety. I thought my anxiety was derived by from trading, but it's not. Right now, I'm just checking my pulse now. For example, it's 56, 57, and that's my goal, right? To stay 60. I'm surprised it's 57. Um, that's just a sign that you are calm, and you. I have to stay calm if I want to do something. And when I started this business, boy, this was that was something crazy. I had so much anxiety, and my heart beat was, if I say 80 or 90, that was really low. It was 100, 120. It was like I was doing exercise, man. And that was, I wasn't in a right state of mind. Really, I wasn't. Um, I really was. I didn't have control of myself. But it is not a thing that. What I realized, it wasn't a thing that came just from trading. Trading was a trigger. It was there was something there that came from my day-to-day life, and what trading did was just, put those things, on the surface for me to see. Right? It was for me to see, and I had to deal with all those, little things, big things that I have in my personal life to, you know, become better, to get better. There's this lady, and when you start, something that I love from Google, you know, many people complains about the algorithm. You can have a good you can make a good use of that algorithm also. Uh, the way, especially now with IA, when you start when you start, it learns what you do, and start to keeps you, the more you use, I guess I have signed in Google for this beta test of AI. The more you use, the more it learns about you and the path in the path you are in. I start to give you some recommendations, and it has been spot on lately. One of the things, I don't know if I can, that this oh, is this lady here. um, I got here, that Breadstone Barkley also have some nice, I mean, I have tried a lot of things, right? But this is life is a trial and trial and fail and trial and fail. Come on, trial and error, right? Journey. You just try one thing, doesn't work, go to the next thing, doesn't work, go to the next thing. And every time, you some way or the other, you get closer and closer, and finally you got something that helps. That works for you. That's the thing, that works for you. You will find something that works for you in trading. Maybe something I do. Maybe something that Tom does, right? Maybe something Tom does, or maybe something that Jim does, or maybe Peter Resnicek or whoever. There can be somebody there, but you have to do something on your own. You have to figure out what you want to do, what you are able to do as well, what kind of personality you have, what kind of trader is the trader that fits you the best. I was in trade business, not trading, but trade. So I got, for example, I was just so you know, if you want to be a plumber or an electrician, you have to figure out first what kind of electrician you want to be. It's not just being an electrician. You want to be a residential electrician, you have to be a residential plumber, you want to be commercial, you want to be in the commercial business, you want to be in the industrial area. What if you choose residential or you choose commercial, you want to do new residential, you want to do new commercial, you want to do remodeling, you want to do repairs. So there's a lot of things there, right? Trading is not different. You just got, the thing is, we don't see that because the only thing we need to do is buy and sell. That's the only thing I need to know to be a trader, and that's so far. That cannot be. I mean, much far. That cannot be that. That cannot be. How can I say this? That cannot be that far from reality. Right? I am short-term trader, for example. I cannot trade in the same way as Jim does. I'm not the same type of trader as Linda, for example. The short video that we have watched in X a couple months ago. I have used this stream. I am doing these streams. I started to do streams. That's a couple years ago, and the first thing why I did it is, the main reason is to not to get distracted, because once you start to trade, you have to be in the market all day long. That's why I thought I had to be, right? But after 5 minutes being here, I was watching YouTube, watching a movie, watching a commercial, whatever. Kind of like to be in focus is what I started to stream. then you realize that if you teach something, you learn actually more. Because if you are not able to put your thoughts, to put what you think you know in words, then you don't really know as much as you think you do. Right? That's the realization I came out. I came up to once I started to do that. Well, it was really hard to put my thoughts in words. Then this streaming, after I realized after time, it kind of like got in the way what I wanted to do. I wanted to do something, but oh my God, I was talking and I missed this thing, I missed that. It's a journey, you know. And now I just put this. I have seen people come and go. Some people are very enthusiastic at the beginning. Some people get uh, really what can I say this disappointed. Not disappointed, but when they learn the risks they are taking, when they place a trade, they just got scared, They think that they're just never going to do it, right? But and but the thing is, you know, now you know a little bit more. Now you know the risk that you are taking, that you are actually better than you were before, when you were blindly, buying or selling just because the low of the bar, just the 5 minutes bar is, or the opening is below the previous one, whatever, right? And let me put these charts. And for example, I'm going to call Tom again. Just because I'm going to talk about these charts. Did you see? We were talking about these highs, for example, right? It's very question of highs. It just took the stops and now, boom, it's back. I don't like this market. Now, what I was saying, what I was doing, I was selling. Market is going low, sell here. Now, my stop was I sell here. My stop is right here. Market took my stop out and continued, and the same to the upside. I didn't know what I was doing. I was just throwing money right and left, and then I realized. You start see these traders that sell. Even there are some people that sell strategies, right? I sell an indicator, blah 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 blah. By the way, that's when I lose some respect for Peter Resnicek, because when he starts selling, when he starts selling an indicator, because he knows, markets are. Now, if you can do something like that, it means that you can program, you can build an algorithm, you can program something to buy the market here, or sell the market when the market reaches this high, I'm sell, or when the market reaches this low, I increase my size or whatever, right? You just build the program. Now, if I can think that, then I don't consider myself the smartest guy in the world. So probably somebody else have, somebody else have thought about that same or have the same thought are high. Right? Now, what are the odds that somebody with money have thought the same? Right? You understand what I'm trying to say? If that can be done, and somebody would have already done that, and actually it was done, and it doesn't work. It didn't work. It doesn't work. We have to be present in the market. We have to watch the market and make discretionary decisions here. That's what we have to do. That's what I don't have Bollinger Bands. I don't have McCandys. I don't have MSIs. I don't have whatever. Right? Call it. You will find. You will find. Yeah, if you want to put a study, you will find a study here. For example, Thinkorswim has this lot of study. What are the studies? No. Look at these studies. Right? They are ordered in alphabetic, sequence. Alpha. There's 5 there. Look at this. How many studies are here? Bearish only. 10, 20 here. Another 20. Candlestick. Oh, look at this candlestick patterns. 10. Come on, man. There's over 100 here. Crossover, cycle studies, daily studies, David Elliott studies, Elliott waves, John Parsons. You will hear. I will build one. There's Victor Reategui study here. Put it here for sale. There's a lot of things. Right? Which one works? All of them work. All of them work just enough to make you believe that they work all the time. There are lunar cycles also that work. Planetary alignments. You must unbelievable when you are in this business. You will find people that you fail so many times. You're desperate to find a reason, right? To find a solution. And you start joining groups back and forth, right? Trading groups here, trading groups over there. I used to have, for example, I used to have a set study here that I got from one of these groups. It was full of things. That was Jim Coase, full of crap, right? Full of things. I got bands, shadowy areas, you name it, right? Just to show it how crazy. It was just for educational purposes to have it here. Let's just show you. I don't have that anymore. I use also. What is this called? Okay. And look at these things, right? Look at all these groups that come. This group is from who's this? Fast Track Trading. This is one of these prop firms. Top Tire Trading, Top Step. This is I don't know who the heck is this. Apex. And this is a particular group that I have this. I still have this for educational, for illustrative purposes. Just to show you how crazy this thing can get. This is just. And this group has how many? Has thousands of people in here. Thousands of people. Right? What's the business? If you don't know what the business is, then probably you are the business. And it's just crazy. Craziness here. You just Yeah. This is mine. Uh, oh, what Sam has said today? Movie. No, good. Very nice, Sam. Very nice. True. He uses uh, volume profile. I haven't done that much actually here. But something that I liked. Where is he? What? I don't have him. What? Maybe he has erased his. Huh. Yeah. Oh, this is Anthony Kruger. Sometimes when I don't, I feel lost because you have. I like, I like to. He also has some opinion on the market. Um, I haven't read him in a while. And sometimes you find people that have a different view or similar view, and you may that are not that crazy. It's kind of like more centered. Um, they may see something that you haven't seen, and every once in a while I used to check him as well. JJ also was one of those guys, but he has dedicated to sell and other things now. We have a trend now. We might have a trend. Now we have 5 periods in the session. 1, 2, 3, 4, 5 periods in the session. The POC is 5 wide here. That low is barely. That's a poor low. Look at this. This is not that crazy. This is the range here that was taking. This range was taking. Wasn't taking kind of like in a rational way. No, quote unquote irrational way. Markets are irrational. These stops have been taken. Let's see if there's something here on the upper side. Now, if traders keep trying to take the high and fail to move value inside yesterday's value, no, never mind. We have balance here. This is a 3-day. This is balance inside balance. We have a balance day inside a balance range. This may be 10% lower now. Around that. I don't know if Jim still has. I guess Jim doesn't have volume. He doesn't. Oh, this is really nice as well. Um, no, it doesn't have volume anymore. But you can calculate this volume. For example, you have today you have here, let's call it 116, and yesterday we have 134, right? 116. So 13% lower than yesterday. Yeah, that's what we say, right? 10, 10, something like that. This thing marker. And yesterday, something really interesting yesterday was, okay, it started good, right? Higher, and then just levels up with yesterday. And as a matter of fact, it ends lower than the previous day. There was a lot of activity the first hours. Alright guys, as I say, unless you have any questions, I guess I'm going to call it a day. I don't have anything about just watching this market. Let me do something here before I go. There can be something actually here, maybe developing. I am not quite confident of this low here. It's very, very questionable. It's not just the low we don't have excess here. This low is also very questionable. Remember, but those are just one piece of information, right? This is support, right? This is support. This one is getting weaker, and the thing is, people may have this bias, right? They may have this bias because I see something, or because you see some weakness here in this area, for example. This is the daily. This is also questionable. It's questionable in the weekly. It's questionable in the monthly as well. So all time frames are questionable. Not just the intraday, right? Not just just what we are watching here. We're watching here, but the intraday. I'm sorry if the screen is too small. I just realized I have a big screen, 48 inches screen here. And you may have been seeing something really small. But it's not just this thing, but also the other time frames. Now let's check for what Nasdaq is doing. What the other markets are doing. Turning lower. These highs are questionable. This may have some downside acceleration. This one too. Oh boy, these markets are kind of like okay, something here. Look at this gap. The market just closed the gap and reversed. Very mechanical here. The Russell has closed this little gap here. There's another one here. Notice where this is coming from. Closes the gap, up we go. Closes the gap, up we go. Closes the gap, and up we go. Nasdaq actually was trending higher here. They get back in. It's still inside this range, in the weekly time frame. This is bigger support, 19,600. Has taken this high. The monthly is trending. The monthly is trending higher actually. All moving average. This is reversing here. Huh. Let's check the Dow. It's trending higher also. Barely took the low. Look at this low. Barely take the weekly low. It has a big gap here. Ooh, look at this gap. Oh, this is the one, right? 41 feet. No, 41 550. Yeah, this is the one. This gap is this one. Oh, the curious thing is this is a gap in the weekly time frame as well. That same thing can be seen. Look at this. Oh man, look at these things. I won't talk about that. You know, remember what we say this? This is not valid anymore, just because I am seeing this. Fill the gap, up we go. Fill the gap, up we go. God, this is. Oh. That's the Dow. I mean, Dow is only 30 stocks, right? Oh, I was going to talk about this gap. There's a gap here. It's very unusual to have. Look at what kind of gap. Look at the gap we had here. For example. Oh boy. Oh boy. About the same size. This is a gap. The week in is the nuance is not the gap itself, but the time frame. This is a weekly time frame. Very rare to watch to see a gap in the weekly time frame. There's one here that has not been taken. Has not been closed. It's very rare to see gaps here. And look at where this gap is, for example, right? There was an all-time high here, you know, market coming, market making new highs, and look at where this gap is. You know, it's way up. You know, this is the year, all this year. This break here has rebalance, has shaken many of these longs here, but I guess the advance we have is, come on man, I guess we have something like 20% high, 10, 15, yeah, about 20% year over year relative. This is a very good year. Excellent day, excellent year. These ones here are the end of the month days. Look what happened after. It's getting, I think it looks like it's getting old. Now, we were talking about, you know, that we might be seeing a trend here, but now this is profits being taken actually up here, right around this big block, you know, this big area here. This is support, same as this one here. Or in this case, of resistance, right? All right, there's a nothing day here. I'm going to take a break. I'm actually going to have breakfast. What the heck? Oh. And wish you guys excellent rest of the day. Stay safe. See you tomorrow. Bye bye.